today, the company actually increased its offering right before it went public, and joining me now is the CEO, Michael Carroll. So, Mr. Carroll, why increase the offering?
We had a lot of demand from really quality institutional investors, and we thought to be able to meet that demand, it was the right thing to do to have a larger float in the stock and to really satisfy that demand.
Well, talk about quality investors. You have some quality anchors. You've got TJX, TJ Maxx, which symbol is TJX, Walmart, Kroger, some really very strong, stable names.
We're really excited about it. We're Kroger and TJX's largest landlord in the U.S., and we really love that necessity retail with the strong value discount component to it. And so we think we have best-in-class anchors and retailers.
I am a little concerned about your debt. When I was going through the filing, I saw you had $6.3 billion of debt. Is that going to be your big challenge, is making those payments?
We don't think so. The money we're raising here today is going to delever the company, in that we've increased the size of the offering. That's more deleveraging we can do. We have a plan to continue to delever the company over time, and we're very comfortable with where we are on an operational basis and where those levels are going forward.
Your dividend is a 98% payout. While it's very generous for those lucky shareholders to get that payout, I feel it's almost like a dividend price for perfection, that God forbid there's any stumbles, that dividend could be at risk.
Look, this is really a relationship to how that's laid out in the prospectus. The reality is we're paying out basically over 90% of net income of the company, and it doesn't really factor in growth. We have really strong growth in our business, so on a more common measure, AFFO, we're well within peer ranges of where that payout ratio is.
You have 522 shopping centers. You're talking about growth. Where would you grow? What areas of the country?
For us today, the real focus of the business is really the internal growth opportunity in the business. We really have great embedded growth. We have below market rents in an environment where market rents are increasing, generally because as you look out in your neighborhoods, you see no new shopping centers being built. And that really has allowed us really good runway to be able to lease space in our portfolio and lease space to quality retailers at higher rents.
Let's get back to the regional areas. I mean, what regional areas are you seeing that are the strongest for your rents?
You know, I would say today, unlike 12 or 18 months ago, we're seeing more of a broad-based recovery in our business. We're in basically coast to coast, and as we look out at that business today, we really see strength kind of all across the board. So it's really hard to put your finger just on one area of the country today. And that's very different, and I think it's a good sign for the economy that there is a broader-based recovery that's underway here in the U.S.
There has been a trend in some of the big box retailers to start to kind of downsize, maybe reduce their footprint. Are you seeing that continue?
We do see it. We see it on both sides. We see retailers that want to be more efficient in their selling area. We see also retailers like a Kroger who want to be larger and have larger stores. Our job really is to make sure those retailers are in their most current prototypes that can maximize sales. And with that, we find whether they're getting larger or smaller, if they're maximizing sales, that's more rent that we can ultimately charge for them. They're willing to pay more for that space, and it allows us to put space that maybe they're not maximized. We can put that space in better retailers' hands that will maximize sales in that space. So all in all, today, on both sides of that equation, it's been a very good trade for us to put retailers in their most current prototype where they can maximize sales.
Well, and it looks like if you were able to get in part of the stock, it's been a good trade for you because the stock is trading up. It looks like it was priced right. That is Michael Carroll. He's the CEO of Brixmor Property Group, and I'm Debra Borchardt with TheStreet.